Good morning, everyone. A very warm welcome to the 20th Indirect Tax Colloquium Cross by Cross Analysis of 52nd GST Council Meetings. New changes with effect from 1st October 2023 and more. Organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified CA, qualified LLM, and LLB. He is the chairperson of the Fiscal Affairs Committee of BCC and I. He is the regular speaker of various professional forums on the key area of direct and indirect taxes. During the session, please put your video and microphone off. If anyone have any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker Vivek sir to take the session forward. Over to you, Vivek sir.
Thank you, Vaishnavi. Avik, am I audible?
Yes, sir, you are audible.
Okay. Thank you. I'll share my screen. Okay. So, good morning to all the participants present here in this colloquium. And thank you for joining on this Sunday morning. In fact, we were thinking whether to have it on Sunday morning. This is the first time we have had a colloquium on a Sunday, or we were thinking alternatively to have it on Monday, that is tomorrow, but we thought that it is the first day of the week, so might as well try out on a Sunday morning, and we'll keep it very, very succinct and focused to the point. Thank you to VILGST for partnering with Tax Connect on this colloquium. Now it's been almost 2 years. We are nearing 2 years of our indirect taxes colloquium. I see many, known friends of mine have joined in this colloquium. Please do keep, writing down your questions in the chat box as and when it does come, because there are some critical issues which have been taken up by the GST Council 52nd meeting yesterday, and which will impact all the taxpayers by and large. So this is the benefit of a live session, that you can ask questions and we can analyze and try to answer all of them at the end in the last 10 to 15 minutes. So nowadays with social media, being so active, I'm sure most of you have gone through the minutes of the meeting of the 52nd GST Council meeting, which was put in brief in the press release yesterday. Luckily, the press release has also come yesterday at 6 or 7 o'clock, which is much earlier than generally it comes at 9 to 10 o'clock at night. So we were able to read it and understand it. Here we'll discuss in detail. Mr. Mohan B says your voice is breaking. Is the voice fine or is it breaking? Avik, Vaishnavi?
No, sir, your voice is fine.
Yeah.
Not breaking.
Okay. Okay. So thank you. So, first and most critical aspect, which was as expected, clarified by the press note as well as by the in the press conference by the revenue secretary, was on the applicability of GST on corporate guarantees. I am sure it will impact all of the participants here, and therefore we'll analyze the impact in detail, including the whether it is retrospective, whether it is prospective, uh, and what would be the consideration, what would be the deemed consideration, etc. in case of corporate guarantees. But before that, day before yesterday, I suppose the Telangana High Court in the case of BST Steels Private Limited has held, just in contrast to what the GST Council wide press release has clarified yesterday. The Honorable Telangana High Court, in a judgment which, with all due respect, I must say, was too brief to be clear, but I'm sure that arguments would have happened in the court, and only a part of it got reflected in the operative part of the judgment. But notwithstanding, the case was that a personal guarantee of a director was provided to a bank for the purpose of taking a corporate guarantee for the company. Also, the personal property of the director was sought to be deposited as a security deposit for the purpose of taking a corporate guarantee for the company in which the person was a director. Now, the question was whether GST is applicable. Wide notification 13/2017 central tax rate on reverse charge, entry number 5, whether these are services provided by a related person as per explanation to section 17, in this case the director, to the company for the services provided by the director for securing the corporate guarantee or the loan for the company in which he is a director. The Honorable Telangana High Court has ruled that since the reverse charge itself is not under question in this case, therefore the service would be taxable. That is the service of the director for an activity done to provide, to help the company get the loan in terms of the corporate guarantee, was taxable. However, the critical issue, which was not discussed at all in the judgment, was that since in case of the personal guarantee of the director, no consideration was exchanged, whether then the services would be taxable or not. And that is the most contentious issues in any kind of services for the purpose of securing a bank loan for corporate guarantee is concerned. Right? And all of this issue on corporate guarantee, we know, have originated from the recent Honorable Apex Court judgment in the case of Edelweiss Financial Services, wherein it was held by the Honorable Court that the activity of a director or a related party to help in getting a corporate guarantee for another related party, generally a subsidiary company, would not be taxable under service tax regime because no consideration was involved, and in case of service tax, consideration was a prerequisite for the purpose of taxability. However, in GST, we all know that Section 7, subsection 1, clause C, read with Schedule 1, provides that in case of related parties, any activity done by the one related party for another would be taxable even if no consideration is exchanged. What would be the deemed value of the consideration? In such case, that is provided under Rule 28 to be as the open market value. However, in case an invoice is issued, very, very important, second provision to Rule 28 provides that in such cases, in case an invoice is issued and the recipient is eligible for full input tax credit, in such case, the value declared in the invoice would be considered to be the transaction value. So even if the value is say 10,000 rupees for the purpose of provision of services with respect to securing a corporate guarantee by a director to a company, then in such cases 10,000 rupees would be the open market value. In case the company can take the full input tax credit in such cases. So these conditions under 7(1)(c) read with Schedule 1 and Rule 28 in our view was absolutely applicable only in case there was an employer-employee relationship between the director and the company. Only then this could have been avoided. However, for relieving the burden on the taxpayers and as a very, very important relief for the taxpayers, the GST Council has held that in case of personal guarantee given by the director to secure a corporate guarantee for the company, in such cases, the transaction value would be treated as zero. It would be clarified via a circular, and of course the circular would have a detailed understanding on why the GST Council thinks as such. However, friends, there are certain in-betweens, the lines which need to be read in the press note with respect to the personal guarantee provided by the director to the company. A circular would be issued, it is said, when no consideration is paid by the company to the director in any form, directly or indirectly, for providing the guarantee, that is personal guarantee. The words in any form, whether directly or indirectly, they are very, very crucial. We all know that directors are paid in case they are employer and employee. Then directors are paid salary. In other cases, directors are paid a commission. In some cases, non-executive directors are paid sitting fees. So sitting fees, of course, it is for the attending of board meetings, etc. However, if the directors are paid commission or salary, then it can be argued by the department that a part of that commission or salary is indirectly for the purpose of provision of services for providing the personal guarantee to the company for securing a loan. Right? So field officers can sometimes come out with unique arguments. However, the question is that would the burden of proof lie with the officer who is alleging that a part of the commission or salary is for providing personal guarantee, or whether the burden of proof is for the taxpayer to prove that the allegation is wrong. Notwithstanding, it can give rise to another round of litigation. So as a company, as a taxpayer, we need to be aware that this can happen. Therefore, our suggestion is that scope of services or an engagement letter providing the detailed services for which the director is being paid a commission or a salary, that should always be kept handy, and that should be analyzed in case the provision of this personal guarantee is mentioned in the engagement letter with the director. Then, of course, it is a payment in an indirect form to the director for provision of personal guarantee. However, in case in the engagement letter or the scope of services for which the commission or salary is paid, the provision of services of personal guarantee is not mentioned at all. In such case, in our legal submission, if the officer alleges that there can be an indirect payment to the director, then the burden of proof shall lie on the officer to prove that a part of the payment to the director is actually towards the provision of personal guarantee. Right? Now, another issue which we are facing when circulars have clarified in favor of the taxpayer in certain cases is whether this circular is retrospective or prospective. Now, I mean, this is the first time we are facing such a question, because a circular which clearly states even the background of a case, why the circular has come, even in that case, it was challenged and an issue was raised by one of the states. In such case, our legal submission, if it happens in this case that even after a circular is issued, the officers raise an issue that whether the circular is only prospective. So for all the earlier periods, they raise a show cause or an observation. In our legal submission, the case would be covered by the decision of the Honorable Supreme Court in the case of Messrs. Mysore Electrical Industries Limited. It has been held by the Honorable Apex Court that a circular which is beneficial to the SSE must be applied retrospectively. However, the contrary is also true. In case a circular is detrimental for the SSE, then it must always be construed as prospective. The same was also upheld by the Honorable Apex Court in the case of WPI Limited Ghaziabad versus Commissioner of Central Tax. So, these are some nitty-gritties we must understand. Now, in case of corporate guarantees issued by related parties, say by the holding company to the subsidiary company. As of now, the provision stands is that as per section 7(1)(c) read with schedule 1, even a corporate guarantee provided by the holding to the subsidiary company without a consideration would be considered as taxable, and the open market value under Rule 28 would be considered as the fair value of the services provided. However, in case an invoice is raised by the holding or to the subsidiary company, then the value of the invoice would be deemed to be the transaction value as per second provision to Rule 28. Now, another rule would be inserted. Rule 28 sub rule 2 would be inserted to provide that higher of the two values, that is 1% of the value of the guarantee or the loan, or the amount charged by the holding to the subsidiary company for the services, would be the open market value in case of corporate guarantees provided by related parties, that is holding to subsidiary companies. There is no mention in the press note of an amendment to second provision to Rule 28. However, provisions are always to limit the rule. Therefore, in general terms, we can say that provision would always, you see, have more relevance over the rule itself because it is limiting the rule. So if second provision to Rule 28 stands in its current form, then even after Rule 28(2) is inserted, even then second provision to Rule 28 would prevail, and it would mean that in case an invoice is issued, then that would be considered to be as the transaction value. So in our view, second provision to Rule 28 would also be amended to exclude Rule 28(2), which would be inserted going forward. That would make it clear that for the purpose of corporate guarantees given by related parties to one another, that is holding to subsidiary companies, say, the transaction value would be considered to be 1% of the value of the guarantee or the amount charged, whichever is higher. Right? Thereafter, a circular would be issued. Right? To provide that corporate guarantees in case of related parties would be taxed as per Rule 28 Subrule 2. Right? And not as per second provision to Rule 28. Now, friends, issues are that as of now, it has not been mentioned in the press note whether this circular would be clarifying on the past periods or not. Generally, rules are inserted and made applicable until and unless provided to the contrary, they are applicable with prospective effect. Therefore, it is understood that the Rule 28(2) would be prospective and corporate guarantees as per Rule 28(2) would be liable to GST prospectively. However, in case the rule itself says that it is retrospective, or even if the rule does not say it is retrospective, then for the past periods, if the circular does not specify anything, then there might be an exposure. However, again, as I discussed earlier, the case of Mysore Electricals Industries would apply here too. And if the circular does not provide anything, then that circular would be considered to have retrospective effect, being beneficial to the taxpayer. However, there can always be issues which are raised for the past periods. And friends, there is a very recent issue due to which I have my concerns. We all know that from 1st October 2023, ITC on CSR would not be available as that has been blocked under 17.5 clause FA of the CGST Act. And it is a very clear understanding that because the clause 17.5 FA has been inserted and CSR has been blocked from 1st October 2023, then for earlier periods, ITC on CSR activities should be available. That is the clear understanding. However, we have spoken to many of the officers and they are all of the view that even for the past periods, CSR ITC would not be eligible even after the insertion of 17.5 FA from 1st October 2023. If we apply the same ratio, same understanding here also, then even after Rule 28 Sub-Rule 2 would be inserted prospectively, even then the exposure may be there for the past periods. Therefore, it is our view that systems, first of all, for the prospective period, systems should be implemented and the invoices should be raised accordingly in case of corporate guarantees. Next is that in case of companies where subsidiaries are exempt from taxation, from GST, in such case, this would be an additional cost on the subsidiary. So again, corporates need to understand whether they should continue with this or not, because 1% on the value of the guarantee of the loan, that would be a huge cost. On the contrary, please note that in case the holding company is exempt from GST, its services or goods are exempt from GST. For example, alcohol company gives a corporate guarantee to a subsidiary which is liable to GST. Then, to this extent, the value of the corporate, the value of the transaction in this case, that is 1% of the corporate guarantee or amount tax, whichever is amount levied, whichever is higher, that would form a part of the taxable turnover and proportionate ITC to this extent would be available to the holding company. Furthermore, please also note that while the lower value of the transaction shall be deemed to be as 1% of the value of the corporate guarantee or the loan, there is no ceiling limit. Therefore, the value can even be higher as decided between the related parties. So friends, tomorrow we must all go to our offices and determine on what would be the transaction value. In case there is a past period exposure, we must make it clear to the management and we must be ready to implement this procedure. Right? So this required detailed discussion. That is why we have devoted some time on the liability of GST on corporate guarantees. We will now go to the next other clauses of the press note. ISD versus cross charge. Now, you all remember, and if you can go to my colloquium post the 50th GST Council meeting, I had clarified as per the press note issued after the 50th GST Council meeting that for prospective periods, ISD registration would be mandatory to be taken for companies which have multi-state branches. Just cross-charge would not do, especially for services received from third parties. For example, statutory auditor. For example, advertisement services, friends, this is very critical. Okay, advertisement services. Mind that there is another amendment. There would be another amendment as proposed in the press note of the 52nd GST Council meeting on the place of supply of advertisement and co-place of supplies also. I will come to that. But where, say, for example, advertisement services are also received across India. Many of the companies, what they are doing, or taxpayers, they are taking all the input tax credit in the HO state and sometimes cross-charging, sometimes not even cross-charging. That, I would say, can come up for litigation. So henceforth, for these kind of common expenses, it has to be routed through ISD. How are they going to build this mechanism? They are going to amend section 2 subsection 61. 2 subsection 61 defines input service distributor to mean an office of the supplier of goods or services or both which receives the tax invoices issued under section 31 towards the receipt of input services, that is HO, which receives the invoices. They might add over here from supplier of services other than distinct persons. So where the HO receives the invoices from third parties, for example, advertisement agencies, for supply of services of advertisement across India, then they need to follow the procedure of distribution under Rule 39 and they need to follow the manner of distribution under Section 20 of the CGST Act, read with SGST Acts. So, way forward for industry, at least for now, all the previous litigations with respect to ISD versus cross charge would be put to rest. Most of the taxpayers are facing such a litigation. However, going forward, in case you do not have a ISD mechanism, you must take ISD registration. Most important is communication to the vendors. Even more important is to call out the common services and distribute it. If you do not distribute the common services, for example, many of the taxpayers, they are taking transportation services across the country, but bill is made in the HO state. Not correct. Please change this mechanisms. Otherwise, what we understand after these amendments are made, the HO state might raise issues. So, vendor communication is important and 6A matching is important and thereafter issuing ISD invoices. Many of the times we are seeing that distribution is made, but ISD invoices are not present. They are made at the time of audit or assessment, right? Just to cover up the procedural issue. But we are seeing, friends, high-pitched demands. We are seeing high-pitched observations across sectors during assessments, during investigations, During GST audits, and I will come to that, all high courts, including the Delhi High Court yesterday has ruled, there can be for the same issue, for different issues, for the same period, there can be parallel investigation, audit, assessment by various agencies, state, center, anything. So we need to be very, very meticulous about implementation even of procedures under GST. The GST Council, however, is trying to positively try to take care and clarify issues. In fact, we have seen just now in case of personal guarantee of a director, even when Telangana High Court has ruled in favor of the revenue, even then the council in its wisdom has exempted the personal guarantee from GST. Similarly, friends, in case of time barring period for filing of appeals before the first stage, appellate authorities, section 107(1) provides that appeals shall be filed within 3 months of the order. However, 1 month's extension can be granted in case considered fit by the appellate authority. In all the cases, all high courts have ruled, including the case, very recent case, you can see on your screen, Nandan Steels and Power. The courts have ruled that limitation under 107 is a specific limitation prescribed under the Act, and therefore the limitation under the Limitation Act of 3 years would not prevail. Therefore, even if there is a 1-day delay in filing of the appeal, then nothing can be done. Right? So, as of now, the taxpayers are under a big hardship. What to do in case such appeals have been delayed? What to do if they have been rejected? Amnesty scheme has been introduced, shall be notified soon, wherein such taxpayers can still file an appeal up to 31st of January 2024 by paying 2.5% extra pre-deposit while the cash ledger, not the credit ledger. 10% pre-deposit you can pay through the credit ledger, but 2.5% additional pre-deposit you have to pay through the cash ledger. However, very, very important, please note that this relaxation is available only for those appeals which have been rejected or not filed up till 31st of March 2023. In case after that there are certain appeals which not been filed by the time barring period, then this facility is not available. Another important fact over here is what to do in case the appeal has been filed after the time barring period but not rejected still. There are cases where the hearing has not happened. What to do in such cases? In our legal submission, you must pay the pre-deposit of additional 2.5% in cash and write a note to the appellate authority that notwithstanding the fact that a hearing has not happened, you are taking the benefit of this circular after complying with the prerequisite of the circular, which or the notification which would be issued apropos this decision of the GST Council. Right? Again, a very, very important step by the council and a taxpayer friendly step. Now, in case of attachment of banks, we have seen that most of the time the dispute for which the attachment is done, that is not resolved within 1 year. It keeps on delaying, and once the period of 1 year is over, then as per rule 159 sub rule 2, you need an order from the commissioner to vacate the attachment. So the commissioner must issue an order that needs to be presented with the bank, and thereafter the attachment is vacated. And in case the dispute itself is not resolved, then there are delays to get this order. Therefore, the bank attachment keeps on continuing for much more than 1 year also. Now, as a tremendous relief in such bank attachment cases, the council has decided that the DRC 22 form for attachment of the bank, that should have a time barring clause. The form itself will be valid for 1 year from the date of the issue. So after 1 year, you need not approach to the commissioner to vacate, to give an order for vacation of the attachment. You need to merely write to the bank that the attachment should be vacated automatically. Supply of services by railways comes under forward charge mainly. However, certain supplies come under reverse charge. White entry number 5 of 13/2017 Central Tax Rate. Transportation of goods or passengers and renting of immovable property, only these two come under forward charge. Other than these, services like parking contracts provided by the railways, way leave charges, loading, unloading, so on and so forth, all of these services would fall under reverse charge. From the date when this notification would be amended, from that date, all services provided by the railways to the business entities, that would come under forward charge, and the railways would charge GST. So major amendment in procedures required by the railways. However, I am sure many of us may have missed paying reverse charge in such cases, especially mining and other companies. If they have missed paying reverse charge, please pay. And in our view, you can take the credit after payment of tax with interest. In case you are paying RCM on such services provided by railways, then, and we all know that government departments, they take time to change the procedures. So from the date of the notification, even if railway does not charge GST on forward charge mechanism, no need to pay under reverse charge. So companies and taxpayers might change their processes accordingly. Place of supply amendments. Now, circular shall be issued for section 13 subsection 9 of the IGST Act, which has been deleted with effect from 1st of October 2023, wherein in case of transportation of goods other than by mail or courier, the place of supply should be the destination of the goods. So, for example, for import of goods, while the service might be provided by the shipping line to a foreign party, the place of supply was the Indian territory because of this section 13 subsection 9. However, now from 1st of October, the place of supply should be the place of the recipient. In this case, in my example, out of India. So a circular should be issued to this effect. However, very, very important, I discussed it initially in my discussions, is that circulars or notifications might be issued for supply of advertisement services or co-location services. Now, friends, as I discussed, for advertisement services, even if advertising agency is providing advertisement services across the country, it is providing advertisement in hoardings across all the states. Yet, what is seen in many of the cases is the advertising company is providing a bill to only the HO, and ITC is taken by the HO, not routed through ISD. Now, the place of supply in such cases, as we understand, may be amended. And co-location services, again, taking the same example, possibly for place of supply, even if you are taking the separate bills, you're not routing it through ISD, possibly in our view, the place of supply for these kind of co-location services may be specified and maybe separate bills need to be taken in separate state. However, let us wait for the consequential notification. Export of services. Now, we all know that in case you are exporting certain services outside India and the exporter bank does not have a branch in India, neither the Indian bank has a branch in the foreign country, then the transaction is done between the bank through the Nostro and Vostro account. The consideration in this case is received by the provider of the services in the Vostro account, in the INR, and not in convertible foreign exchange. Section 2, subsection 6, clause 4 of the IGST Act was amended to provide that even if the consideration is received in INR, and when it is permitted by the RBI, for example, like Vostro account, then it would still be considered as being received in foreign currency, and it would be acceptable for the purpose of considering whether it is an export of services or not. However, still we are seeing that many of the officers, they are not accepting this, and in case the consideration is received in INR, then they are raising observations and demands. Even Circular 125 has clarified this position. Even after that, demands are being raised because FIRCs cannot be provided in such cases. Now, we understand that a circular may be issued to clarify the position, and most important is to clarify how the field officers are going to ascertain whether this INR has been received through Vostro account or not. Mind that in case the very recently I got a query. What about if I get payment through a Indian person? In this case, in my example, I export the services. The foreign importer, recipient of the services, has a receivable from a Indian person, and I get payment from the Indian person in INR. Will that be considered as a valid payment? Until unless RBI permission is received expressly, then this kind of payment through INR, in my view, would not be acceptable. Now, this is just to amend the anomaly in case of SEZs, where a supply is made to the SEZ on payment of duty. Even that would be considered to be as a valid zero-rated supply. To that extent, there was some anomaly in IGST notification 1/2023 issued, wherein they said that only on payment of duty for export would be eligible other than export of pan masala, gutka, etc. Now, even export or supply to SEZ on payment of duty would be considered to be as a valid zero-rated supply and eligible for refund. Changes in GST rates, right? So there are some there are some important decisions for food preparation of millets. That would be in case it is sold this atta consisting of millets or any preparation consisting of 70% of millets. If sold in loose form, it would be exempt, and if sold in packaged and labeled form, it would be liable to 5% of GST. Now, very important, those service providers who are providing services to central government, state government, local authorities. In case the participants here or your clients are providing any services to center, state, local authorities, these rate changes would be applicable for you in some form or the other. In case you are supplying services, not goods, by provision of water to center, state, or local authority, or you are providing public health services. Now, very recently, I came across a case wherein a private player was providing actually a service to the National Health Mission, wherein it was setting up dispensaries, wherein patients would come, walk in, and get their health checkup done. That was considered to be as taxable because it was not a clinical establishment, or because it was not a form of medicine, etc. While we wait for the notification, I feel that these kind of issues where you might be providing as a business entity, you might be providing services to center, state, or local authority or government authority by way of public health these may be covered by the notification and would be considered to be as exempt. You don't have to go into the nitty-gritties of the exemption and other entries. Sanitization, conservancy, solid waste management. Many of the taxpayers, they provide solid waste management services to municipal corporations, panchayats. Slum improvement upgradation. If you are doing construction work for slums, or if you are beautifying slums, etc., all of these would be exempt going forward. Now, entry number 3 and 3A of the exemption notification, that has been widely under dispute. These consist of either pure services or composite supply of services, including works contract services, wherein 25% or less is the value of the goods. If they are supplied to government authorities, which are rendering services as provided under 243G or W article of the Constitution, then they would be exempt. There have been many cases in the service tax as well as the GST regime. However, entry 3A, that is a contentious entry in the GST regime, wherein now the determining this, whether your value of the composite service, for example, you're doing a works contract, you are building public roads. How would you determine the valuation of the goods and service? In case the goods part is less than 25% or not, that becomes an issue, especially when it is provided to government. Maybe you get an order from the government. Say you are providing public roads construction to state government. The value of the contract is 1 crore. The state government itself gives you an order that, okay, 20 lakh rupees is towards, tar and the chips, etc. 80 lakh is towards the value of the labor. However, your purchase price of the chips, coal, tar, etc., the goods part, is 50 lakh rupees. But the government has given you an order that the value would be considered to be 20 lakh. Now, whether your purchase price will prevail or the value as provided by the government would prevail. This is a contentious issue in 3A. A very other recent, I would say, landmark GST case was and is continuing the case of DGGI raised with the flour mill owners, wherein the state government has taken services of the flour mills owners of grinding and crushing the wheat, and the state government is taking atta. They are giving the grains to the mill owners, they are taking the flour. Per kg grinding charges are say 100 rupees, which includes packaging, etc. The cost of the package is 40 rupees. But the state government has given a valuation charge where it has valued the packaging cost as 20 rupees. Then whether this entry 3A would prevail or not, that is still under consideration, even after the GST Council clarifying White Circular 153. So friends, as I said, those of you who are involved in the provision of services to government, center, state, or government authorities or local authorities, for you, this entry still remains. It was discussed in the council meeting and it is documented. Therefore, those who are providing services to government, you might continue to take the benefit of this entry. Molasses, while you see, The logic for reducing the rate of molasses from 28 to 5% is provided to benefit sugarcane farmers. However, it is a fact that molasses is also used in the alcohol industry, which is exempt from GST. So 28% GST on molasses was hitting the alcohol industry. Now molasses would be 5% only. And we might see the share prices of alcohol industries going up tomorrow. Big gain for the alcohol industry, in my view. Okay, whether royalty is a tax or not, mining companies, big time disputes in Supreme Court would be heard by 9-member bench of Supreme Court on 12th of October coming week. Whether the royalty paid by the mine owners to the state or central government is in the nature of tax, or whether it is a service for which royalty is paid. On 12th of October, it would be heard by a 9-member bench of the Honorable Apex Court. And as a positive development before that hearing itself is that 30% of the royalty is paid to District Mineral Foundation Trust for the upkeep of the mines and the services to the mine owners. The question was whether this 30% paid to this District Mineral Foundation Trust, whether that is also a royalty or whether it is a tax. Whether GST is applicable on this 30% or any other payment to District Mineral Foundation Trust, or whether GST is not applicable. The council has clarified that GST is not applicable in this regard. Zari would be taxable at 5%, or yarn even made of metallized polyester films. This entry number 137 has created a confusion. Now it is clear that it would fall under 218AA, as is understood from the press note, and it would be 5%. Extra neutral alcohol. In the case of Jain Distillery, the Honorable Apex Court the Honorable Allahabad High Court, following the decision of the Honorable Apex Court in the case of Synthetic and Chemicals Limited, has ruled that the state government cannot tax extra neutral alcohol for manufacture of alcoholic liquor. This is very important. Extra neutral alcohol for the purpose of manufacturing of alcohol for consumption, human consumption, only that would be not leviable to GST, VAT would be levied. That is clarified by the council. VAT would also be levied in case the state governments impose VAT on it. It was not automatic, so to say. But the GST Council will not tax extra neutral alcohol for manufacture of alcohol for human consumption. So again, another benefit for the alcohol industry. So this council meeting has been mainly, a lot of developments have been there for the alcohol industry. Job work for processing of barley into malt, again, that would be taxable at 5% and not at 12 or 18%. Under entry 26, clause 1 of notification 11/2017 central tax rate. Right? Bus transporters who are providing buses to e-commerce operators, who are companies they will charge the e-commerce operators under forward charge. Others continue to be under reverse charge and e-commerce operators would charge. Now there is some, this needs to be seen once the notification comes. The foreign going vessel, if they are move on the coast, for 6 months they reconvert, then they would be exempt. It would be like cruises, etc. But this is not very well clarified in the press note. We would wait for the notification to come. So friends, other 2-3 very important developments which we'll discuss before we take on the questions which are in the chat box. GST on ocean freight will not go into the notifications. You can all go through the PPT at your own pace. It will be shared with you. However, some important aspects is points. No GST would be there on ocean freight at the rate of 0.1% when the value of the goods is determined on a CIF basis. However, if the value is determined on FOB and the Indian importer of goods pays to the foreign shipping line, Indian importer pays to the Indian shipping line, right? That is other than CIF valuation of the goods. Ocean freight, GST on ocean freight would still be applicable. So it is not that transportation of vessels service is totally exempt. It is only to the extent where the value cannot be determined, the freight value, right? Now, what happens to the old payments? If they are paid under protest, in our view, payment is not of tax, payment is of any amount. And in our view, in case you have paid GST on ocean freight under protest in the earlier periods, then due to the fact that this entry was considered ultra virus by the decision of Mohit Minerals, then the time barring period for taking the refunds would not in such cases prevail. It would be the payment of any amount and not taxes. The government was not authorized to collect taxes as per Article 265 of the Constitution of India. Right? Gaming, casinos and horse racing, again, through almost 10 notifications and amendments in the CGST, IGST law, a whole new code has been developed. We have discussed this in our earlier colloquiums. You can go through this, but we'll just discuss briefly on this point. Earlier, Schedule 3 had entry number 6, wherein actionable claims only to the extent of betting, gambling, and lottery. They were taxable, other actionable claims were not taxable. Now, even casinos, horse racing, and online money gambling, they will be taxable as specified actionable claims as defined under 2102A of the CGST Act, right? The entry number 227A has been inserted in the notification 11/2017 central tax rate. Some and other entries have been deleted. Mind that not all online games would be taxable as specified actionable claims. Only online money gaming means where money is exchanged, where players pay or deposit money on money is worth, including virtual digital asset. Many of the persons have been misinterpreting this and considering that virtual digital assets are liable to GST. No, virtual digital asset when paid as a consideration for online money gaming would be liable to tax as a consideration, and online money gaming would be liable to tax. So when consideration is paid in the expectation of winning money, so money is paid in expectation of winning more money. In a game, scheme, competition, or any activity or process, most important is whether or not it is a game of skill or chance. So if you are depositing money to earn more money in expectation of earning more money, whether by your skill or by chance, then it is liable to be taxed as specified actionable claims at the rate of 28% on the face value of the deposit or the transaction. However, in case you are paying just to play a game, you're paying a fee, and after playing the game, you get certain points by which you can play more games, but you don't get money as such, then it would not be taxable as specified actionable claims. It would be specified as it would be classified as online information database access or retrieval services and liable to be taxed accordingly. The definition of OIADR has also been amended to this respect. Foreign providers of online gaming, money gaming services, they need to take registration in GST in India. Otherwise, their websites would be blocked. Place of supply would be the place of the person, recipient here in India. Valuation rules have been issued. You can go through the VILGST website. Very soon in the coming week, a detailed article of mine would be there. You can go on LinkedIn. I have already, our article has been published where we have discussed in detail what is the implication of this rule 31B and 31C for the purpose of valuation. So the liability of GST would be on the, so if you are depositing 100 rupees for playing this online money game, GST would be liable at 28 rupees on 100. Now, if you play the game for 50 rupees only, take 50 rupees refund, GST amount would not be refunded to you, right? You can go through that article where we have discussed in detail. Certain other consequential amendments have been made. Form GSTR 5A has to be filed to this respect. It has been amended, and mind that very important. Now, for all those who are providing services to unregistered parties, not online games or online money games, anybody who is providing services or goods to unregistered party, you must mention the state of the unregistered party. And that would be the place of supply. However, for online money games, it is now mandatory. So for online money games, you must always mention the state of the recipient, unregistered recipient. That would be considered to be place of supply. And Form 5A would be filed on the basis of place of supply. Now, in the press conference, the Honorable Revenue Secretary has clarified that this amendment is should not be considered as retrospective because the government was always saying that online money games would be taxable, casinos would be liable to GST. Therefore, those we understand that 1.5 lakh crores of demands have been issued to online gaming, money gaming companies, and the revenue is all set to contest it further. So, long litigation ahead, so it seems. So, few other issues as we discussed that in Delhi High Court very recently has ruled that various investigation adjudications can happen side by side. DRC 1C has been made applicable on the GST portal. So, in case you have a difference between your 3B and 2B ITC, please do expect an online notice under DRC 1C. The most critical aspect is if you do not reply for the DRC 1C within 1 week, then you will not be able to file GSTR 1 or IFF in the next period. Very soon, GSTR DRC 1B would be applicable for the outward supply part difference also. So, we can expect more notices. Now, a small note on ROTTEP drawbacks. The Chennai Commissionerate has informed, the Chennai zone has informed, and Mumbai zone too has informed that many of the EOUs, many of the taxpayers who are under MOVA scheme, they are taking ROTTEP benefit, drawback benefit, right? They are not manufacturing, taking ROTTEP benefit. So you might go through this note, and in case there is certain non-compliance, you might rectify this. So, thank you very much, friends. While we had other items on our agenda today to discuss the CSR issues, the GST on CSR, Rule 37A, Circular 193. You see, we are already at 12:25. You can go to our YouTube channel of Tax Connect online, and there we have various videos discussing Rule 37A, CSR. We have discussed in detail Circular 183, 193, ITC optimization. We have discussed it in detail. You might access it from there. We'll take certain questions now. Yeah. So, Mr. Ashok Jha says, provision for automatic restoration of provisionally attached property after completion of 1 year. The council has recommended this will. Oh, I think you're talking about this. I have already clarified this, Mr. Jha. Okay, you're saying, sir, this will apply from retrospective or issue of circular or notification, but it is beneficial to SSC. Yes, you see, the law would be amended over here. So it would always be prospective. However, for the past period, if you have not got your bank attachment released even after 1 year, then you might invoke Rule 159 Sub Rule 2 to that effect. There is no requirement of this amendment also. Bank attachments more than 1 year are illegal under Section 83 read with Rule 159. Right? So please go to the commissioner. No need of this amendment at all. One officer is not defreezing after even 4 years. Please go to his seniors. Or if not, if they don't relent, then you have no option but to go to the High Court. Mr. Nayak says RCM paid on director sitting fees at HO. Is it required to be distributed under ISD to the branches located pan India? Of course, yes. You have to follow the procedure under rule, I suppose it is uh, 54(1)(a). I need to recheck, but this needs to be distributed. You need to pay it from the HO and then invoice from the HO to your ISD, and from ISD you need to distribute it. Okay, under ISD provision, it is mandatory for company having ISD registration to advise its third-party provider to bill its services through ISD or services obtained in regular GST, and no number can be transferred to ISD for distribution. Yes, as I have clarified, you can transfer from normal to ISD and thereafter distribute. However, I would suggest that it is better to ask your vendors to bill directly to the ISD. Otherwise, this would be a long procedure and there might be certain procedural lapses and unnecessary. You have an exposure out there. Okay. Considering the bill to please explain. Now, Mr. Naik says whether tax invoice towards corporate guarantees given by holding company to sister concern should be raised on monthly basis or one annually. See, practically, this would be paid only, this would be renewed only annually, right? Practically, what happens is that it is renewed, this corporate guarantee is renewed annually, and once this guarantee is given annually. So I would think practically it should be once in a year. But if you are renewing it monthly, then of course it can be done monthly. However, again, now this 1% would be one time. Even if there is a monthly renewal letter, the 1% would be applicable only once for the period for which guarantee is there. Can we take the benefit of amnesty extended period of appeal if JC Appeals has rejected it due to appeal filed beyond time period? Yes, that is why this amnesty is there. Advertising through hoarding posters in G20 meeting in Delhi. Is it required to be distributed pan-India through ISD or it can be availed in Delhi only? Very good question, Mr. Naik. Now, you need to see whether only Delhi is benefited through this or pan-India. Generally, I think pan-India, all your branches would be benefited through this, and therefore it would be better if you distribute it in as a common service. But in case you feel only Delhi is benefiting through this advertisement, then you may only retain it in Delhi. If XYZ branch office is outside India and that branch company is selling goods and services to his customers which are located outside India, in India, XYZ in balance sheet considers the income and expenditures of books of accounts of branch company account. My question is whether such type of expenses related to branch account are required to be paid RCM by Indian company expenses of warehouse storage goods and admin expenses. Mr. Sunil, very good question. In fact, we are dealing day in night out with these kind of issues. And see, in case of service, you need to see place of supply. Then you should not take a blanket view. So you have given three examples. Warehousing service. In warehousing services, the place of supply is the place of the warehouse, right? So place of supply is outside India. It is not an import. No RCM required. Storage of goods. You again need to see where the place of supply. If it is outside India, no RCM. Admin expenses like selling expenses, that the place of supply is place of the recipient, that is your Indian company. Then it might be considered as import of service subject to other provisions of import of service, and then RCM would be applicable on this service, right? So you need to see service wise. Many of our taxpayers, they contest that no, why should I see service wise? I will debit it by the journal entry in my books of accounts. Fine. You can debit it through a journal entry. But accounting is not important. The bills are important. Bills are from different service providers. Bills are for different services. In our view, you have to see it service wise. Why not government say that effective 1st of January 2017 in case of CIF import, no IGST is applicable on ocean freight. Mr. Pillai, as I have said that there is an exposure for the government for those who have paid RCM on ocean freight on CIF on under protest. There is an exposure of refund. Already Honorable Gujarat High Court has ruled that refund should be available. So that is what in my view, that might be a reason. Is it required to obtain letter of authorization issued by SEZ authority to SEZ developer authorized operation for zero rated supply like we used to take in A1, A2 during service tax era? Not from 1st of October 2023. Mr. Naik, you should have taken, or you should always take letter of authority. Otherwise, how would you determine whether it is for authorized or unauthorized operations? Notwithstanding this amendment which has come, the zero rated supply is only for authorized operations. Can we get notes of this seminar? Yes, PPT will be shared. DRC 7 can be rectified if liability paid through DRC 3 only, tax paid, interest not applicable, since availability of ITC in credit ledger or appeal to be filed compulsorily. Appeal should be to be filed compulsorily. I don't think the authority would amend its DRC 7 in this regard. But you can talk to your authority. Guarantee by holding to subsidiary in February 2019, then GST applicable in 2017-18. If guarantee before 17, then still GST applicable year-wise. You need to bifurcate the period, right? You need to bifurcate the period into 9 months post GST and 3 months pre-GST. Mr. Patel says which are the goods services SSCs are notified to export of goods by payment of duty. All goods services can be exported by payment of duty, that is on payment of duty, except pan parag, pan masala, gutka, which are specified in notification 1/2023 integrated tax. You can go through the notification. Mr. Naik says in case of pure services to center state government offices not understanding in relation to any function entrusted under 243G or W and disallowing exempted sale in every state, a clarification should be released by the government to avoid litigation. You see, everything cannot be clarified. I mean, maybe in your case, certain officers are taking certain view. But if it is 240 covered under 243G, for example, if it is for building public roads, if it is for environment greenery, right? That is very clear in 243G or W, right? Officers cannot take a different view. However, in case there is a dispute whether it is a public road or a private road, then there can be a question, right? However, when you are providing services to panchayat, municipality, government authorities, then they will not build a private road for themselves. I've just given an example. You need to prove with documentary evidences. Friends, one another, as we are on this subject today, even though we are on a Sunday morning, maybe, we are in holiday mood, but current set of litigations cannot be avoided by mere submission. We have to give evidences, right? Officers are looking for evidences. Many of the times we get into this mode of writing a lot, but not providing evidences. We need to provide evidences to substantiate our case. Sometimes that plays the trick, and that is where we nip the litigation in the bud at the adjudication stage itself. In case of rod-tape script, where issues raised on the exporter, what is the risk for third-party buyers? If the exporter if there is a demand on the exporter, right? And the exporter does not pay or litigate, then they might go to the third-party buyer of rod tape script. If the exporter litigates, then they will not go to the third-party buyer. That is what is generally happens. What will be the time of supply for corporate guarantee? Very, very good question, Mr. Shah. What would be the time of supply? And I've already answered it. In my view, it should be 1 year. It is renewed every 1 year, right? But I'm sure it will be clarified by this circular which would be issued. How to avail amnesty scheme if JC appeal has rejected the appeal? Do we have to file the appeal again? Yes, it would be filed again insofar as I think Mr. Jha, but this circular or amnesty scheme which will come out, that will clarify the process further. If advertisements expenses are only in HO, still ITC on the same needs to be distributed pan-India. If pan-India, all the states are getting the benefit of the advertisement, I would say yes. If we cancel our ISD and go for cross-charge, what would be the consequences? You see, many consequences, Mr. Shashank. I mean, general penalty is one. The ITC might be disallowed by the recipient state for the cross charge. So, because I've already in service tax, we have handled this case where even the tribunal has rejected our contention. Right? We took a different route in that matter. We took an alternative submission and got a relief. But be careful if you take this kind of stands. Good delivered by Indian supplier to Indian entity as per instruction of foreign related company. The supplier charges GST will be cost or ITC can be availed. Recipient is foreign related company, right? And place of supply now after 39 of IGST has been deleted would be the place of the foreign company and no GST would be applicable in this case. Kindly go through section 13 subsection 9 of the IGST Act with effect from 1st of October 2023. In case of guarantee provided prior to 1st of July 23, GST may not be attracted as the service was provided. Yes, as I have already clarified, Mr. Desai, before 1st of July 23, no GST and corporate guarantee already held by the Supreme Court in the case of Edelweiss Financial Services. ISD registration person received notice to clear liability for outward supply as ISD is only for distribution of ITC. Liability for, well, ISD registered person received notice to clear liability for outward supply. I mean, ISD, how can it provide outward supply? It can only distribute, it can take and distribute. So in case you have not taken any credit and just issued an ISD invoice, then of course, there would be a demand for it. Mr. Rao says if media advertisement expenses available all over India and maybe outside India, what is the treatment if you are not registered in all the states? See, if you are registered only in say one state in India, right? In that case, the recipient is only one state. No need to cross charge or distribute. However, if you are registered in other states also, then what I have stated, and if the other states are getting the benefit of this, then might as well be a good idea to distribute it to avoid litigation. Okay, last, Mr. DK, whether tax demand in case of ISD would be on ISD or the recipient. Tax demand would be on the recipient, not on ISD. Right. So thank you very much, friends, for joining on Sunday. This video would be available on our YouTube channel. And as I've stated, for the other points on the agenda items, you can go through our YouTube channel. We have discussed everything over there. This Rule 37A, CSR, etc., etc. PPT would be shared with you, and we would be holding our next colloquium, once these notifications, etc., come. So stay tuned. Thank you very much.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants.